everybody. Welcome to another episode of The Real CFO, formerly the KB article. I'm excited today. We've got Michael Sylkatis. He is with Shield Advisory Group. He's the director of business lending. And, as we talk with folks and more about business and entrepreneurship and everything, one of the key components or issues we always hear is, I need financing. I'm struggling getting financing. Michael is one of the guys to do that, but not just that. He's more of a consultant that thinks long term for the business and not just right now. I need the money and do this, but long term. What's the long term plan, the goals, and everything to get the business structured right? So, with that said, Michael, welcome to the show.
Hey, thanks, Chad. Thanks for having me on, man.
Hey, no problem. I'm glad you're here. I appreciate your time. Say, Michael, before we jump into the nuts and bolts of this and start dropping value for our listeners, tell everybody a little bit about yourself. Where are you from? What do you do? Kind of what got you into this line of work of business lending?
Yeah, thanks, Chad. So originally I'm from Dallas, Texas, North Dallas area. And out of school, I went into Fidelity Investments, went into helping people with their personal wealth management. Did that until about 2011. Had a couple businesses at that time that I ran as well. But during my time as a wealth manager, what I did is I worked about 40 really wealthy families. And what I found is that most of them, about 90% of them actually, they were all small business owners. And I really enjoyed working with small business owners. So once I kind of migrated away from owning my own businesses, I started working with basically nothing but small business owners and helping them get financing, kind of structure some deals if they want to sell, if they need more equipment or just working capital, which kind of seemed like a natural progression coming from the other side from what I used to be on. From there, that's where we're at now. I'm with Shield Advisory right now. Great. This is a great firm to be with. First and foremost, we're business consultants over here, which, anytime you're wanting to expand or grow or do something strategic, capital is always going to come into play with that. So that's where I'm at now. Work with business owners every day, helping them get the better financing that's available for them in their business. And if they can't get it now, we try to work with partners like yourself to get them into a better position so that they can get real true financing, not something that's going to not something short term, but more long term.
Yeah. No, Michael, I think you hit on one key thing there. You're not just in business lending, you're business consultants. And there's so much more than just, I need money right now or whatever. And you work in one lane to try to get them money. There's other variables that come into play with that. It might be their financials being in order. It might be what's their long-term goals, what's their tax minimization strategy, all of these things. So you guys are incorporating a lot of that and just business advice along that pathway as you work with folks to get lending. Is that correct?
Yeah, absolutely. Like I said, first and foremost, that's what we do at Shield, right? And the second part of that is going to be the lending, or maybe even a strategic plan on how to move forward with your business growth and help the lending move that way, whether it be marketing, whether it's growing, you need another truck or you need something else in order to get you to the next level, which will help you not only continue to grow your company, but maybe set it up for a succession or a sale at the end of it. But the business financials, they're key. And I gotta be honest. Sometimes I can tell when someone's running a really good business when, we're talking, hey, I need to get some P&L, some balance sheets. Let me see what your financials are. And sure, let me get it from my controller, my CPA, or I'll go to QuickBooks and I'll send them over to you. In a lot of cases, and actually in a lot of recent cases, I've seen where people just don't have them. They don't have them for maybe a year, which, how do you know what you're doing? How do you know what your revenue is? How do you know where your expenses are going if it's not something that you can monitor, even on a quarterly basis, but a monthly basis would be even better?
Yeah. Yeah, no, that's definitely important. Let's kind of unpack that a little bit, in terms of financials. And a lot of businesses, because I run into it too, and we work together, full disclosure, we kind of partner with each other. If I need somebody that needs some lending opportunities, we'll talk with Shield, and then vice versa. If they have some clients that need some work in the accounting controller area, they'll come speak with us, see if we can help them. But let's try to, can we equate bad financials to net cost to the company? Meaning, from a lending standpoint, right, there's different variables or different levels of lending. There's a lot of alternative measures, high cost, high risk, right? So if a company doesn't have financial statements and they need lending, is it safe to say that they're going to pay a higher interest rate? And what's that cost on the $20,000, $30,000, $100,000 loan? Just by not having books and financials.
You can almost always assume that that's going to happen to you. I mean, just think of even in the alternative space, maybe don't care as much about as detailed financials as a bank would. But if you're looking, everybody when people think of business lending, and I get this every day because of the phone calls I'm on, right? It's, I don't want a advance, which an advance is sometimes they're necessary as a Band-Aid, but they're probably one of the worst options that you can get for your business. And you'll be paying in upwards of 40 to 50% on that money, probably over 9 months. But all you need is bank statements to qualify for that, So when I talk to business owners and they're like, I don't want any more of these, and I get on the phone with them every day, multiple times a day, and I'll hear them say, well, you can't help me, or I don't want another daily or weekly. And I'm like, great, I don't want to give you one. That's not what we want for you over here at Show. We want to get you into a better situation, move forward. And then we can help you grow your business and then make a plan for it in the future. That's what our whole entire plan is or a mission, if you will, over at Shield. But if you don't have proper financials, you're kind of stuck in this you're in a hole, right? I can put you in this one little hole, and that's about all I can do for you. I can't really go out to a bank or even there are alternative lending sources out there that are decent with the rates environment we're in now. But if you're wanting true financing, you're going to have financials. So going back to your original question, on a $20,000 or $30,000 advance, you're looking at paying somewhere around. You'll borrow 20. You'll pay back probably $28,000 to $30,000. There's your 50% over 9 months. And you do that on a weekly or a daily basis. So say it's a weekly basis, you got 26. So you're going to pay a little bit over $1,000 a week. Well, that's fine and dandy when you get that. It's great when you get that $20,000 hit your bank account, right? So here, it's 20 grand. I'm going to use it to I got to pay a vendor. Maybe I need to buy some supplies to get me through a job. Well, once that runs out, you're stuck with that payment for the next however many weeks. So it's 26, but say you put that capital to use over the course of 3 to 4 weeks, you got 22 more payments you're about to make, right? And that money's gone, and it's at a high rate. So now it's like now I'm paying this $1,000 every week. And what I see happen, and I think a lot of people in this industry would agree, is then they got to get another one, right? Because it's like you're robbing Peter to pay Paul. And what happens during that time is I get people on the phone, like I said, and I tell them, look, I get it. You're on a merry-go-round or Ferris wheel, whatever you want to call it. It's like a hamster. You can't get off of that because you got to keep borrowing, and you're paying one off, and then you're renewing them, and so forth. And so when that happens, you have to be very disciplined, number one, to get away from that, or you have to get some kind of strong financing, like an SBA loan, maybe a term loan product that's going to get you into a very good rate over a longer term. A term loan, 3 to 5 years, SBA is 10 years on some kind of monthly payments where you can kind of get back on your feet, get back on track, get some cash flow back, because those loans, all they're doing for you is sucking your cash flow away.
Yeah. So basically, if you don't have good financial statements or your financial house in order, you're going to be paying a higher interest rate, significantly higher interest rate. You said almost 50%, right? 40 to 50% on these
Correct.
over 9 months. So you borrow 20, you're paying 30, 35,000 over the next 9 months on that 20. And now you have to repeat the process and you're just you're financing your debt payments, right? You're covering your debt service and you just keep digging and digging and digging. So,
Yeah.
On the other side of that, if you work to get your financial house in order, your financial statements in order, now you can go get more preferential lending, extending that term so you're not eating up all that cash flow, and you can quit kind of reverse compounding
Yeah.
that debt, where
Yeah.
it's going to eat your lunch over time.
One thing to add to that is, the loans I was talking about, they're MCAs, advances. And I tell this to every client. I'm as transparent as can be about it. If you come to me and you say it's a Wednesday or a Tuesday, and you're Michael, I have to make $50,000 payroll by Friday. There's pretty much one option out there for you, and that's going to be one of those advances. However, with that said, what can we do to get a plan to get out of that in the next 30, 60, 90 days, right?
Yeah.
Because sometimes they are a necessary evil. I have
Sure.
to pay a vendor. I have to get these materials in, or you don't have an option. But if that's the route we must take, let's have a plan, an action plan put in place to, okay, while we're going to do this, okay, we're going to put this Band-Aid on, and then we're going to slowly rip it off by getting you to a longer term product. Some kind of, like I said, a term loan, SBA loan, and alleviate that payment once and for all. Give you an example. I had just yesterday, as a matter of fact, there's a guy we've been working with a little over 6 weeks, kind of 2 weeks for planning, seeing where we're going to be. He owns a coffee shop, and he has a couple of these MCAs, and it was crushing him. And he did decent amount of business, but when you get these payments and they just keep stacking on top of each other, it hurts you. No one can survive paying $10,000 a month on capital you've already spent. Okay, so, and that was only on $100,000. So yesterday we got him a what I call quick short-term SBA. Okay, it's not a short term, I should say, but it's a short time in closing. We were able to get him $100,000 in 18 days to pay off these two advances. He went from paying $10,000 a month. His payment on this was $1,266 per month. So essentially, I told him, you got a raise. You just gave yourself back $8,500 a month in cash flow. And first thing he did, and not all business owners are as quick and to the point as he is, but he is. He called them, negotiated a small payoff with them without any negativity on him to say, hey, I can pay you now. Can you give me a little discount? They said, absolutely. And now he doesn't have that payment anymore. And now he's down to only paying $1,200 a month. Right. So now our next strategy with him is to work on getting his financials even better. Right. Working with him, maybe categorizing things properly, get him into, and every 6 months we can do another SBA loan for him. So what our plan is over the next 6 months, working together, getting his financials stronger, and categorize properly, maybe show a little more profitability where he can, and get him into a larger long-term SBA. I say long-term, every SBA is 10 years. I guess I keep going back long-term from the short-term finance we were just talking about, but SBA is 10 years unless you got real estate in there. But and get him something so he can have good capital, so he can grow, so he can maybe acquire another business, buy his competitor out, something along those natures.
No, that's great. No, and there's a place, like you said, for those short-term loans when you desperately need them. We go through business slumps, right? You go through cycles sometimes, and during a certain season of business, things might be slow or rough, but it's a short-term solution. And I like what you said, you go in with a plan. Hey, we can get you the short-term solution, but let's work towards that long-term play, because that's really going to, like in the example you just shared, he's freeing up $8,500 in cash flow. What can he do? What kind of ROI can he get on that savings to build his business? If you want to scale, that's the way you do it, right? And it's a cash flow game. And if you get in these short-term financing, high interest rates, it's going to eat your cash flow unless you have a plan to exit it pretty quick. So that's
even going back to we say 8,500, which it is. That's $100,000 a year. That's a definition of bootstrapping my next project, right? Or maybe he needs to buy a new walk-in cooler or buy something. He's got the cash to do it, or he can go out and he has great. Obviously, if you're getting SBA, you're a very well qualified borrower, and you can go out there and get expand, buy some new equipment, maybe expand a little bit without going into more debt. Now that you have this extra cash flow that was always there, it was just encumbered by some loans that weren't the best for the client.
Yeah. Let's kind of jump into the financial statement, the accounting side of it. And Mike, what I see in the industry is everybody, or in my industry, because we're in a bookkeeping, accounting, controller, tax planning space, is folks are so accustomed to being reactive versus proactive.
Yes.
They look at someone like myself, CPA, out there that they work with, as a cost of doing business, not necessarily as an investment over time. So they treat it as such. And when something's a cost, we aren't as passionate about doing it, right? But if you can tie it to a return, like we just did, like in the example that you just saved, this guy saved $8,500 in cash flow, right? Go back to a business that's similar industry as him, might mirror him, but they don't have financial statements. They don't have their house in order. You're probably not going to be able to get them the same solution. So in essence, that situation would cost company B in the same boat that doesn't have financials $8,500 a month in cash flow, almost $100,000 a year, simply by not making a concerted effort or being intentional about having good financial statements, making sure they're managing their business properly. Is that accurate?
Oh, 100% is accurate. And that's a great segue into, I can give you a perfect example of what happened 2 weeks ago. So 2 weeks ago, and it is, you're right. A lot of people call it as they look at it as a cost center when it's not at all. It's actually a profit center. And the reason I can say that is twofold. One is the better finance, but second of all, you know what you're doing. You know what your business is doing. You know the revenue it's bringing in. Why were we down this past month? Well, let's figure that out. Do we need to do more marketing? Do we need how to get our revenue back to where it was the previous months? Where are we spending money at? Why does this category? Why did my parts or my whatever it depends on. Like I'm going to talk about automotive shop in a minute. So why were my parts much higher, or even like 3% higher compared to what they are in the previous months? Is somebody stealing out of my back door? Is what's going on here? And so with that said, we were actually a couple of days away from closing $100,000 SBA loan for a automotive shop, kind of a small mom and pop, but did almost $1 million a year. And the SBA said, "Hey, I need to see some year-to-date financials." And he's like, "Why would we have year-to-date financials? We're still working on 23 tax returns." And I'm like, "Yeah, well, yeah, but your P&L, your balance sheet, so we know where you're at every month." He goes, "Well, we do those in January for the previous year."
Right.
And this isn't the first time I've heard it. So, I mean, obviously, and I said, "Well, look, I mean, this is something you should know anyways. You should already have access to these, so you know how you're running your business is running as it is." But and then I said, "Listen," he goes, "Well, I don't have all that money." I said, "For a good bookkeeper, you're talking for a business like yours, probably $300 to $500 a month. That's not going to just break your business. It's going to help your business." And I won't forget this because of the way it was. And so he kind of put the phone down, and I know his wife, or I would believe his wife, or maybe business partner, was sitting next to him. And he's like, he tells me to go out and get out a mouthful feed, and I had to correct that, and I was like, that's $300 to $500 a month is not a mouth to feed by any means, because I guarantee you're going to see improvement in your business from that. Not only that, but going back to your cost of capital. This loan we're getting for him, SBA is coming out with some new things right now. They are anticipating rates to come down. Some banks that we work with. This was a single-digit loan. So he was going to get I believe it's about 9% on 10 years on $100,000. And he missed it because he didn't spend, of course, a total of a couple $1,000s over the past year. When his business could completely, it wouldn't have been like we were talking about at the beginning. It's not a cost center, especially not at that point when you're talking about getting that kind of capital. at such a great rate.
Yeah, it's amazing, but oftentimes it's that pain, right, of experiencing that ultimately drives somebody to make the right decision and move forward and get a firm plan in place. And whether it's $300, $500, or $1,000 a month, right, for the bookkeeping, look at the long-term ramifications of that. And from a financing standpoint, that would have been huge for them. But even on the short term, like you said, you know the story of your business. If you know the story of your business, and that's generally derived from your financial statements, the story, you can make those decisions weekly, monthly, quarterly to reduce costs, increase performance, whatever it might be. It's a direct benefit to your business. So we struggle sometimes talking with folks because they haven't felt that pain yet, right? And they don't get it. They don't get it. But
well, it's just it's just as bad as how would you know? Most business owners, I should say, I'm going to say most. I'm going to say 60% of business owners I see. We see bank statements all the time. I mean, they live out of their bank statements, their business bank statements. What I mean by that is, Whataburger, it could Dairy Queen, it could be, whatever that 7-Eleven, Kroger, Publix, wherever you're at, instead of properly saying, okay, even if I don't care if you don't pay yourself a legit paycheck, right? I mean, at least say, okay, every week I'm going to transfer 1,000 or 1,500 or whatever that number is if you decide you want for your own expenses to a personal account, right? Keep your bank statements clean, number one. That's a huge thing. I've actually seen some lending, even alternative lending, get canceled because they looked through someone's bank statements and they saw some things that they're like, I can't believe this guy literally has that on his bank statement. And going to get lending, I should say, right? But there's no way how much you're doing in revenue if you're only using your bank statement, unless it gets to where your account starts getting negative or very low. How are you tracking the payments you're receiving if you don't have a P&L? You're not.
Yeah, you're not.
Even if you're doing it on a spreadsheet versus a true P&L, you're still tracking it. Give me something. Something works. If I made $68,200 in income this year. I can't tell you anything else, Michael, but at least I can tell you in a month, I can tell you what I made that month just by doing that.
Yeah, it's interesting. I had the same conversation with a gentleman last week. Corporate tax deadline gets stuff to us late. Actually, it was to us probably the first part of August. And I'm like, man, your books are a mess. So I've gone through and done the tax return the best we can, going through the books, QuickBooks and everything. He goes, there's no way I made that much money. Well, I tell you what, here's what we're going to do. We need to engage to do your 23 books, and we got to engage soon because we got to get this done fast, right? Because the deadline's quickly approaching. Well, we did that, and going through all the statements, reconciling everything, getting it cleaned up, and it was a fairly sizable project. He did exactly what you're saying, is everything was run through his business. So, of course, his business wasn't doing that well. Right? He only had so much money in the bank. Well, the reason is because there was about $125,000, $130,000 in personal expenses that were run through the business. The business was doing fine.
Yeah.
You weren't managing your stuff, right? You weren't managing it appropriately. So it didn't seem like it was, but you've got a hell of a business operating, right? A service business, very profitable. You don't feel like you have anything. You have a tax liability. We can't deduct all of that stuff just because it came out of your bank account.
Right.
Now, can we structure some things where you can some of the expenses that you might use on the personal side through accountable plans and different things from a tax planning strategy standpoint? Yes, we can. But overwhelmingly, these personal expenses need to be personal. And like you said, they shouldn't be run through the business account, one, but if they are, they need to be properly accounted for in as a financial software, QuickBooks, Wave, something, a spreadsheet, which can get kind of antiquated if you got
It can,
all these things going all over there. But yeah,
right?
it's a big deal. I mean, it really is. And, we see it all the time from businesses. That, in fact, that's where we get most of our works. At some point, they feel the
Yeah.
pain, and then they need a solution, right? And then they're like, oh,
Well,
this was easy.
another thing too, and I know we're talking about finance and whatnot, but a lot of business owners don't realize, not that I'm an attorney, no advice by that, but that's a way someone could pierce your corporate veil as well, right? If
Right.
you're commingling expenses, and that's something that no one ever thinks about, and probably will never happen to a business owner that we're referring to in the nature of the size that they're in. But it could, right? I mean, it is a
Sure.
possibility that could happen if you're commingling expenses, not properly running your business.
100%.
So,
100%.
but yeah, the finances are key. The finances are key. Like you said, I said up front, we do work together. I've sent you a couple clients that were in those situations, right? That were in those loans that they couldn't get out of. You kind of get stuck in those, as we discussed, and now they kind of seen the light in the tunnel. Okay, yeah, it took me a few months to get to where I'm at now, to get my books in order, because they were such
Yeah.
a mess. And now there's one that, we're getting to where they're about to get funding for their SBA in the next 3 weeks, probably, because they took that time. So it doesn't happen overnight. We all live in a society who wants it now. Who doesn't? I do, you do, we all do. But sometimes we have to take a step back. I said, now take one step back, go two forward. And sometimes in your finances, in lending, in business, you have to do that.
Yeah, no, that's a great point. Everybody wants, that right now, and it does take time. It can be fast tracked, but it does take time, not only from a standpoint of undoing the mess that you've created and creating great financial statements to provide to a lender, but then they have to go through that process. And most lenders, especially the ones that are going to give you the best rates or the
Right.
best terms, they're going to do their due diligence. They're not in the business to give cheaper money to people who are
High
not
risk.
doing good business, right?
Right.
I mean,
Yeah.
they don't stick around. There's a reason interest rates are higher on short-term bank statement only loans.
Absolutely. Just like they
So,
were back in 2007, 2008, when people were using bank statements to get their mortgages, right? You could have been
yeah,
at 7+ 100 credit score, but you didn't do your taxes properly. A lot of self-employed people in there. And they went up your bank statement. You still paid a point or two higher, right? I mean, you did.
yeah,
But no one wants to pay more than they need to pay. But that's why you got to utilize someone like yourself to, hey, here's where we're at. This is what we can do, and we can move forward. And it's not going to be overnight, but we're not looking like years down the path either.
yeah, yeah. Well, let's kind of wrap up that small business side of it, the lending side. What are 2 or 3 things that you would tell the listeners that are in business, maybe don't have their financial statements in order, their financial house in order, have some MCAs, maybe looking to have to go that route at some point in the near future? What are a couple things you would tell them right now they can do that wouldn't cost them a whole lot, just to start the process of getting their financial house right?
So, well, like you said, you can start with QuickBooks. You can start categorizing it yourself. Maybe you've got an assistant in the office that could help you get it started, set everything up, or they could hire someone like yourself to do it. But if you can get your P&Ls and balance sheet, that's such a big deal. Tax returns are tax returns. I mean, they are what they are. We can look at them. A lot of people don't know. You can add back some stuff to them to increase your profitability, show some additional cash flow. So if you can get to where you're cash flow positive, if P&L and balance sheet, P&L and balance sheet, that is like, when you go to the doctor and ask you to take your labs, that's to me, that's your P&L and balance sheet, right?
Okay.
It tells me the health of where you're at. It tells the lender, okay, this is where they're at. They're going to look through it. They're going to comb through it. Where are their expenses at? Just have everything itemized out. So the financials are key, number one. Number two, personal credit. No matter what anybody tells you, they're always going to be looking at your personal credit. Yes, business credit is a huge factor as well. In an SBA loan, they look at your SBSS score or your ETRAN. Most people don't even know what that is, but it's out there. One's an experience score, and some look at your Intellis score as well. or an Equifax as well too. So, but as long as you're paying your vendors on time, business credit is a big deal. Personal credit, everybody's like, well, I have a business. They're still going to look at they're still going to look at it. An SBA, you don't have to have over 700 credit score now. We have banks that we do that go down to 620 or I'm sorry, 620, a 620 credit score, right? So you can still get financing without being perfect. The better you are, the better rates. The better you are, the more they don't even look at some of those cash flow models. Okay. So if you've got a high E-Trans score and you have a high personal credit score, yes, your tax returns are going to matter. Yes, your P&L is going to matter, and your debt that you have is going to matter. However, they may waive a global cash flow review on you, or they may decrease your DSCR, right? Because you obviously, if you have a great credit score personally, you're managing something properly. Typically when I see someone that's got a 7+ 750 credit score, I'm not even worried about their business score, because there's been one time probably in 30 clients that I've seen where they had a great credit score, but their business score wasn't as good. Because if you keep one house in order, you're probably keeping all your houses in order, right? Yeah. So, so it's financials, P&L, balance sheet. Is it difficult? Setting up initially probably is a little bit time consuming. But you know what? When you complete a task that you just don't want to do and you do it, and you're like, man, I really wasn't as bad as I thought it was. And the benefits you get from it are going to be they're going to outweigh the time that you spent so much. And then other than the financials, the credit, it's just, I'm not really sure there's a third one, except seek advice, seek help from the right people. There are people out there that aren't just trying to, they want to build a relationship. And that's what I tell everybody here. We have clients that work with us for 4 or 5 years that keep coming back because we're going to do the right thing by them. We're not a transact. At Shield is a transaction. We're building a relationship. Right now we're starting to get into the exit planning space, right? So a lot of, as you know, and as they keep announcing, baby boomers, they're going to be selling their businesses, whatnot. Well, we try to set people up for success, so when that happens, they can be ready. They know what their business is worth. But knowing what your business is worth and getting it in order takes a little bit of time, and the financial and the lending package comes along with that as well.
No, that's awesome. So before we jump into the last couple of questions, just want to reiterate, if you're a small business owner, entrepreneur, or someone looking to start a business, I highly recommend talking to somebody like Michael, just so you get this foundational principles of what lending looks like. Even if you don't need lending up front, you're probably going to need it at some time along that path in your business. At least you'll be prepared for what you need, or speak with someone like myself. But if you're also in a situation where you might need some lending, talk to Michael, because I've worked with them and some of the clients and seen the success of someone that was in a real, sort of pickle, and getting these short-term, high interest rate loans transition out of that based on working with them. So just want to reiterate that. And I know this has been valuable for our listeners, Michael. But I got to ask you, the Feds just dropped the rates 50 basis points, right? What does that mean for business lending, the entrepreneur, small business owner looking to get financing, new equipment? What's the outlook?
Well, so I think it's going to take probably maybe not a full quarter, but probably half a quarter to a quarter to fully sink into the rates and what we're seeing out there. The good thing about it, to go back to some SBA loans, some of the SBA loans are variable. So we could see them start ticking down right now. So as prime's coming down, right, they always have their whatever they're adding into prime for their profit. Sure. So we're going to see some of them start ticking down now, which is going to save people money, which is great. Like I said, you're going to notice it, and it's going to help a lot. It's going to be one of those things where even you get a SBA loan, and maybe you did an express loan, you're going to pay prime plus 2.5, or something like that. And all of a sudden it comes down 50 basis points. That's going to be a big deal. Sure. To save a lot of money. And, pretty soon you're going to refinance those old SBAs into something that's more of a fixed in the single digits, back to where we were even in late 22, Get that's something you want to keep on your balance sheet. If you can cut your rate by 4 points or something like that.
No, that's awesome. Michael, where can folks find you, reach out to you if they got any questions or need some advice or guidance along this path?
Yeah, so they can go out to reach out to shieldadvisorygroup.com. Where I'm on LinkedIn, Michael Sylkatis, Facebook, all my contact information, my phone number is even on there to reach out and get set up a call. Let me know what I can help you out with. It's we're here to help. We're not here to try to stick you into a predetermined box, if you will.
Right. No, that's fantastic. Hey, everybody, be sure to go check out Michael. Follow him on LinkedIn, Facebook. Just search his name, Michael Sylkatis, Sylkatis. And if you have any questions, reach out to him. He's a wealth of knowledge. And Shield Advisory Group, I've worked with them for the last several years. They're good people doing the right thing for business owners. So be sure to check him out. And again, thanks for watching.
Yeah. Thanks, Chad.